Good afternoon, everyone. Good afternoon. I'm Tej Kanel Kafor, reporter for TechCrunch, and with me we have. Oh, yeah.
Oh, sorry. I thought you were going to introduce us. Okay, I got it. So my name is Sean Lee. I'm a co-founder of IDA. We're a fintech company working on launching stablecoin products out of Hong Kong.
My name is Yusuke. I'm a Chief Strategy Officer of Programat. Programat is a tokenization infrastructure provider based in Tokyo. And prior to Programat, I used to work in Boston Consulting Group. So I had experience to work with governmental sector. So I'm very happy to be here today.
Hi, I'm Nori from JPYC. I'm founder and CEO. We make JPYC, Japanese yen stablecoin, like USDC. Thank you.
Hi, I'm Ruth. I'm a CEO of my own advisory company, ex-banker, recovering banker. I advise central banks on CBDC. I advise fintechs on business strategy, product development. I teach at the university, and I also advise a cybersecurity firm. And stablecoins as part of the crypto ecosystem is something that I've been very passionate about for a long time. So I'll be more bringing the sort of ecosystem perspective to the conversation. Thank you.
Thanks, guys. Today we'll be talking about the future of stablecoin use cases. And my understanding is everyone here except Ruth is building a stablecoin business. And the first question I will be asking is, can you highlight the features of your ecosystem in each country and the opportunities you're seeing building stablecoin businesses? We can start with Yushun.
Certainly. So I will talk about it from the perspective of Hong Kong first. Hong Kong is one of 6 jurisdictions in the world that actually have a stablecoin regime and a stablecoin framework. So what that means is it has a regulation that dictates how anti-money laundering rules needs to be complied, how KYC rules needs to be complied, how the reserve management aspect needs to be complied, and so on and so forth. So it brings a lot of clarity around how a stablecoin needs to be operating inside of the jurisdictions, but also on use cases in collaboration with other jurisdictions, such as Japan, that also have a stablecoin regime. So a lot of these developments have been happening over the past few months, and there are a lot of developments both in terms of use cases, partnership, and also international flow, primarily focusing on different aspects of stablecoins that is starting to really emerge. And primarily what that is that if you look at the stablecoin markets today, it is roughly 99.5% US dollar based. So there's an over-dominance in terms of US dollar. But if you compare that to the international payment system, traditional international payment system, it's roughly about 60%, right? So there's obviously a big gap between 60% and 99.5% or 100%. So we like to think, and I believe my panelists will share this view as well, that other currency-pegged stablecoins will start to eat into that market share, not because the overall market share is shrinking, but it's actually because it is growing. So there will be more needs for non-US dollar stables to operate into the markets, but then also operating in a compliant manner. So that's what we're seeing especially out here in Asia.
Noritaka, what are you seeing in Japan?
So,
Noritaka.
Yeah. In Japan, the legal framework was set in place last year. So we had a legal framework for stablecoin, same as Hong Kong market. And we are doing kind of project to establish the new global settlement platform through collaboration with SWIFT. So we are aiming the new platform, which is fully compliant with the regulations in the financial market. So in the past, the stablecoin transactions will be down only, in the private sectors. So in some transaction, it can be down in the gray zone. But we are seeing how to comply with the regulation and how to meet the expectations from financial market. So this is very important to, to look for the mass adoption of stablecoin use cases. So we are working together with financial institutions in Japan, and also we're involving the top tier Japanese companies, and they have a very strong demand to leverage stablecoin to update their business operations as well. So we're seeing the future to update the existing business operation as well, not only the financial industry, but also the trading business or other business as also can be updated by stablecoin. So this is a feature I'm looking forward.
Noritaka, what you working on with JPYC?
JPYC is a stablecoin issuer and stablecoin exchange, both. Under Japanese regulation, issuer license and exchange license is separated, and the crypt exchange license and stablecoin exchange license is separated. So it's very complicated, but it's clear, easy, and easy to go business. And JPYC will be the first licensor in Japan, both issuer and the stablecoin exchange. No crypto asset exchange can get the stablecoin exchange license right now. So JPYC will become the first one.
Oh, that's interesting. When did you get this license?
At first, digital money type of stablecoin is called EPI, Electronic Payment Instrument, EPI. So it's separated by crypto asset. EPI is like money, not crypto asset. For money, another license is necessary. So the Japanese government make it.
All right. Ruth, I have a specific question for you. We've all talked about, stablecoins, and Dave all talked about, building stablecoin businesses and having to deal with regulation, right? How do you see that playing out with the advent of CBDCs, right, from different, governments, especially in Asia?
Yeah, great question. I mean, I guess coming even back in time a little bit, since 2001 in Europe we have e-money laws, right? And the whole nascency of stablecoins was really rather applicable to the e-money concept, because you issue something, you take fiat in, and you need to make sure if somebody wants to change it back, that you actually have enough liquidity to give it back, right? So the e-money principle, in my view, should have applied all along to stablecoin issuance, because it should be technologically agnostic. The principle was the right one. We're starting now to see Japan and other countries following this, and the same thing in Europe, and that's all great. But I think when we think about CBDC, the question is this another asset class that could compete with stablecoins, or is there something in the whole technological sphere where you can enable CBDCs to be more useful? I've been researching CBDCs since 2015. It's a bit sort of nerdy, really. But now I start to see, obviously, the European Central Bank putting some money behind the talk. I advise the Bank of England. I'm chairing their privacy group on CBDC, which is a very sensitive topic around how much data will a government have about you and how will the flows be monitored. But a lot of the global CBDC conversations are still around retail CBDC and very much domestic. And when we think about stable coins and crypto more general, the whole point was cross-border, seamlessness, facilitating things that today are dealt with in the SWIFT network, which is usually more high value, which is complicated, expensive, and until recently, before GPI, has been very slow as well in terms of the execution. So I do see a whole interesting conversation around stable coins, and Sean pinched me to this earlier in the conversation, around could there be a role for the technological stablecoin piece to enable CBDCs to travel cross-border. Now, I'm very acutely aware of central banks' monetary policy and the control around the currency within their market, fungibility, allowing foreign banks to hold your currency digitally is a very sensitive topic, and people don't really want to open up in that way. But if you think about facilitating retail flows, remittances, SME business, you have a more controlled volume, I think, and at the same time, you can use the technology around programmability to actually be able to really monitor where's my money going globally, which today, when we think about cash, I mean, the UK alone has more than 8 billion sterling that is sort of somewhere around the globe physically that they don't know where it is. So you have a whole high percentage of your domestic currency being in some sort of channels that you can't monitor. So bringing this more to the light by using a combination of technologies and concepts, I think is that opportunity to create CBDC cross-border in execution, actually.
If there are so many advantages, right, that stablecoin technology provides, and also like creating CBDCs, why is the government, or why are governments slow in adopting it and making it useful to their people?
Yeah, I think the question around usefulness is a big one, because if you think about sophisticated payments markets like the European Union, the UK, we have, Japan, we have real-time payment systems, we have high value, we have low value, we have credit cards, we have debit cards, we have buy now, pay later, we have hundreds of different checkout options on e-commerce, and you often wonder, why is there a need for another retail payment instrument? I would almost argue that the domestic need is fairly limited, and therefore there will be a real question around interest of adoption. Why do you convert your commercial bank money into CBDC? We've seen this in China. It was almost helicoptered into the market and people still didn't use it, right? So there is a question around the domestic, but when we think about cross-border international, outside of the EU, outside of the UK, etc., that is when the use case becomes more apparent. And this is where efficient infrastructures in terms of speed and cost are not really available to the mainstream citizen or the smaller business. You need to go quite through a few hoops, and you tend to have intermediaries that extract rent from it. And so I think this is actually where the technological opportunity comes in.
So maybe I'll add a point as well. Dr. Ruth was talking about the vibrant ecosystem in terms of local payments as well as international payment, and I very much agree. I don't think the stablecoin technology is very much to be used for retail payment. However, there is a programmability aspect to that technology that actually does make sense for retail, except it's less about retail payment, it's about incentives and rebates, right? Because if you're able to move this currency on chain, then the incentives can also be done on chain. And that means if you use a wallet and you go to a POS system and you tap your payment, yes, you're paying for it, but at the same time, that incentive can automatically be airdropped to your wallet. You no longer have to know, oh, I'm part of this loyalty system and I'm part of that rebate and I need to take out another card and stamp a thing. No longer need to do that. Everything is all programmable. But the key difference there is that the programmability is actually can be done at the ecosystem level, right? Every merchant can design it a certain way rather than only dictated by the central bank, right? So that's the main difference on that programmable money aspect between a CBDC and a stablecoin. Now, in terms of cross-border, though, I totally agree with you, right? The notion of having different currencies interact directly with each other, that is the billion-trillion-dollar question. How do you do it compliantly while you still are able to bring in the efficiency and the lower and the cost reduction? So some of us that are working in this industry, what we are trying to test is there a possibility where a local currency, say in Hong Kong and one in Japan, the yen, can we directly interact with each other, right? Do we have that facility and the compliance and the rules in place that allow us to still fulfill AML KYC requirements, but we can now go directly currency to currency rather than still rely on the same system that has been in place for 50 years where everything has to be transacted in US dollar. That becomes a key test point that could become very interesting for international commerce and to facilitate real economic trade flow. Because I don't believe that stablecoin is only there to facilitate on-ramp and off-ramp to buy crypto assets. That's what has been in place for the last 6, 7, 8 years. But moving on, as the whole industry matures, there's a lot more utility in the traditional sense that can be facilitated. And that's some of the things that Yusuke and I are working on as well.
Yusuke, do you want to touch on that, on what you're working on?
Yeah, as Sean said, both countries has a different legal framework, and we have a different infrastructure, depends on the country. So one approach is how to standardize those infrastructure over legal framework. This is one approach, but it takes time and cost, of course. So we try to connect the different ecosystem together. So this is a different approach we are trying to do. If we successfully connect each market, then there will be a big stablecoin market in global. And it will be a big benefit for retail users as well. And not only for retail users, but also the companies as well. Because Japanese companies has a huge transaction with Hong Kong entities. So our approach could be impact not only for individuals, but also the companies in real world as well.
Sean, you mentioned earlier that you see use cases or utility beyond payments and remittances, retail use cases. I want each and every one of you to kind of, touch on one promising use case, since we're talking about the future of, stablecoin use cases, right, that you envision in the next 5 to 10 years.
Well, first of all, 5 to 10 years in crypto years is a very long time. That's probably 3 or 4 cycles already. But as we continue to see the technology being embedded as part of traditional finance, then certainly the complexity and the timing starts to drag out. So I think what we're going to see is what Yusuke also mentioned as well is standardization. There's going to be some notion of how digital currencies, including stablecoin, will have different areas of standardization, both in terms of how the token is structured, how the messages are being transformed, and then also how the settlement layer actually works. Because you no longer rely on, say, SWIFT to do everything for you. If there are alternative ways that you can do it still being compliant, then there are things that happen in place that needs to now be embedded in new technology. So a lot of these are being put in place at the same time. And also a lot of the regulators, the Japanese regulator and Hong Kong regulator, the UAE regulators are also talking to each other to make sure there's no regulatory arbitraging that are happening as well, right? You need standardization not only in the technology, you also need standardization in the rules. So I know from working with different issuers and JPYC as well, there are a number of efforts that are being put in place. So what I see is actually less about the technology innovation. It's much more around maturity on standardizations and policy development.
Hiritaka, what's your take on use cases and the future?
Stablecoin is programmable money, and stablecoin transaction volume is twice bigger than Visa network. It's very huge.
Do you mean like globally?
Yeah. So who use stablecoin so often? The answer is AI. About 96 or 95 or 96% of transaction is by AI, between AIs. So after 5 years, AI trade more often.
Do you mean 96% of transactions on stablecoins are made by AI?
Made by AI or bot, like DeFi bot, arbitrage bot, and so on. So they trade a lot, and AI grows first and first. So
sorry, is that legal?
Become higher.
Is that legal?
It's not about legal. It's just basically bots trading with each other. But if you have trading bots with a certain algorithm,
well, humans
on
are
both
using
sides,
the bots, no?
What's that?
Are humans using the bots?
Well, the humans design the bots.
Okay.
Well, I like to think the humans design the bots, not the bots designing themselves. That would be
Wow.
pretty scary.
Yeah, that's why I asked if it was legal, yeah.
Usually, AI designed the AI bot.
Yeah, well.
Okay, so do you want to touch on that, Ruth?
No, just it reflects the current stage of where the market is, because
yeah.
it's the use in DeFi that is sort of fueling this. But I think what we're talking about now is, and I'm particularly resonating with Sean's comments around the loyalty, if you want to bring it into even a domestic e-commerce, even POS environment, the loyalty aspect is critical, and that in itself will make the type of asset class more acceptable to merchants because they will see the gain in it. Whilst today it's very hard, whether it's remittance or domestic payments, people don't accept stablecoins in a mainstream. But once you create infrastructure and opportunity for economic value that you create through this, that's when you hit the mark. And I think that is something very much fueling the domestic e-commerce, but also then the cross-border piece around the programmability. So I do think we're slowly moving into a different era. And as we just said, regulations and standardization are critical. Once the market starts to slightly mature, people see the value of standards. If we think about how long it took us to get the world into ISO 20 or 22 as an example, we need some standards in this environment, particularly around the data, what data you carry and how you can automatically read it so that you enable better reconciliation amongst the participants as well. So the same things that happened in the old world are now happening here. And I think we will see a transition. But the point on AI bots is well made. And I think this is maybe where we should all come in with a little bit more human override at some stage, right?
Yusuke, what's your take on the use cases?
As I mentioned before, most of the transactions of stablecoins so far is in crypto world. But we are trying to involve the companies in real world. So we started the project with Swift to leverage the existing capabilities and the platforms. Because we think one of the hurdle to involve real world company is the cost of implementation of the new system. For example, if banks needs to have a stable coin in their wallet, in their own wallet, and if they have to create new operating system by their own, they have to do a huge investment by themselves. And some banks, for example, JP Morgan or Citibank or other tier 1 banks can do that kind of investment. But other tier 2 banks and most of the banks in developing countries cannot do that. So we are trying to leverage the existing capabilities. So this is one of the key to expand the stablecoin related business in future. So we are trying to approach not only the business between developed countries, but also the business in developing countries as well, because there are a lot of business issues there. And stablecoins can be one of the solutions for that kind of issues. So we're seeing, of course, we're seeing the business in developed market, but at the same time, in parallel, we are seeing the different worlds as well. And the stablecoins also bring a huge impact on that market as well.
Do you want to say something?
So in Japan, settlement fee is about 3%. For example, credit card, barcode, QR code payment, about 3% is exchange fee. I think it's quite high. By stablecoin, it's become lower, about 0.x%. And every business is very welcome that kind of cost reduce.
All right, I think we've come to the end of our conversation. I hope you enjoyed it. And if you'd like to learn more about the future of stablecoin use cases, you can meet our panelists after the session. A round of applause, please.